Good afternoon. I think we can start with our today's lesson, the value added statement. Now, when we are looking at the value added statement, now what we are going to do, I would advise that we look at a brief description of the value added statement. Then we will move to our discussion forum. There is a problem there that we'll also have to solve. Now today I'll be not take too much of your time because we have a meeting in the department at starting from around 2:40. So I'll be a bit faster. So I expect that you are able to download the material so that when we are going through it, we go through it faster. Now, if we look at the value added statement, it is simply a statement that shows the value created or the value added and its distribution to the interest groups. Now, the interest groups can be the employees, it can be the shareholders, it can be the government, and also the promoters of capital. Now, you can also note that the value added statement also represents a statement by an enterprise which it has been able to generate, and also the distribution to the shareholders. For the purpose of calculating the amount of value that is added and its distribution, then we need to prepare the value added statement. Now, the main concern about this statement lies in deriving a measure of wealth, the enterprise that has contributed to the society through the collective efforts of the various stakeholders. Now, the value-added statement is always prepared and published voluntarily. So it is not a must that every institution must prepare the value-added statement. So it is therefore just a presentation which aids in the disclosure of any value that has been added to an enterprise. So we may also define a value-added statement as a statement which shows the income of the company, a statement which shows the income of the company as an entity and how that income is divided between the people who have contributed to its creation. So it is just a statement that shows the income and how now you are going to divide that income between the people who are concerned about the creation of the income. Then we can look at the assumptions. There are certain items that we will assume while preparing the value added statement. There are some assumptions. Assumptions in the preparation of the value added statement. The first assumption is that the value added statement is just a supplement and not a substitute to profit and loss account. So it just helps the profit and loss account. So we don't prepare it in place of profit and loss account. The second assumption is that the same data which is recorded and processed by the conventional accounting system will be the same data that we will use in the preparation of value added statement. So the information that we use to prepare the income statement, to prepare the profit and loss account, and also the statement of affairs, it is the same data that we will also use to prepare the value added statement. The third assumption is that the basic accounting concepts and principles of accounting remain the same. So we will use the same concept. So those are the three assumptions that we are going to use while preparing the value added statement. Now, the objectives of the value added statements are four, which I've identified. The first one is to indicate the value or the wealth created by an enterprise. Number two is to show the manner in which the wealth created is distributed among now the stakeholders. So the stakeholders can be the employees, the shareholders, and also the government. And the third objective is to indicate the organization's contribution to the national income, to indicate the organization's contribution to the national income. And lastly, number four is to use the value added statement as a basis of making an analysis of an institution's maybe financial outcomes with the other outcomes of the other institutions within the same industry, or even the industries that are not the same. So those are the objectives of the value added statement. Then the advantages of the value added statements are: number one is that reporting on value added improves the attitude of employees towards their management. It improves the attitude of employees towards their management. This is because the value added statement reflects a broader view of the responsibilities of the employees. The second advantage is that the value added statement makes it easier for the company to introduce a productivity linked linked bonus scheme for employees. So if there is a bonus, then you will find that the employees' morale and also productivity will also be enhanced, because they'll be sure that if they perform well, then the amount of bonus that they will also accrue will be higher. The other advantage is that the value added based on maybe the payroll or even the sales are a useful predictive tools, so the company can use them to predict maybe the sales or even the pay of employees for future periods, and it helps them in planning. The number four, the fourth advantage is that the value added also provides a very good measure of the size and importance of a company. Number five, the value added statement may also link a company's financial accounts to the national income. So it will show, or it will indicate the company's contribution to the national income. And lastly, number six, the value added statement is also built on the basic conceptual foundation, which are also accepted in the balance sheet and income statements. So we can have the concepts like the going concern, the matching, consistency, and also the substance over form. All those concepts, we use them in the preparation of the value added statement, and they are also applicable to the preparation of the balance sheet and the income statements. Now, there are also some criticisms about the value added statement. Number one, the first criticism is based on the preparation and the presentation. Remember, we have said that we use the same concept, we use the same data that we are also using to prepare the final accounts of the company. Those are the same items that we also use to prepare the value added statement. And you will find that these may overload and even confuse the ordinary employees who are reading the annual reports of the organization. Another limitation is that the value added statement raises a danger that the management may take maximization of value added as their goal. And therefore, you will find that now the other objectives may not be met because they will be concentrating on the value added. Now, there is also another argument against a value added statement that its inclusion in the corporate annual report would involve extra work, and therefore that means there will also be an extra cost that will be involved. The fourth disadvantage or criticism is that the value added data emerges from lack of any uniformity and consistency among different companies in their presentation. So you may find that there is no one given format that is followed by the companies in the preparation of value added statement, as opposed to the final accounts, that is maybe the statement of affairs and the income statements, which have got a format. Now, the other disadvantage is that the value-added statements may lead to confusion, especially in the cases where wealth or value added is increasing while the earnings are decreasing. So those are some of the criticisms or the disadvantages of value added statements. Now, in spite of these limitations or criticisms, it may be said that the value added statements brings about certain changes in emphasis rather than the change in the content in the traditional financial statements. And therefore, the value added statements is considered as a valuable means of social disclosure. It is considered as a valuable means of social disclosure. So maybe we can look at an example of a value added statement just briefly, and then we can move to our discussion forum and also prepare a statement there. So I'm going to post it in our public chat section there, so that I don't have to write it again. So please confirm whether you can see the example that I've posted there. Please, if you can see the example, just type yes. Okay, thank you. So in our example, we are told that the following balances were extracted from the books of Lotex Limited for the year ended 30th September 2018. So the amounts are in shillings, in thousands. Purchase of equipment 7,500, purchase of raw materials 19,655, depreciation expense 675, interest expense 350, investment income 310, closing stock of raw materials 3,400, minority interest in the profits of the subsidiary 200, ordinary dividends 340, value added tax, and that value added tax is included in the turnover 8,000, wages, salaries, and pension 5,000, current tax, the corporation tax, which is 770, and then we are told that the turnover is 32,135. So we are told to prepare the value added statement. Now, in the preparation of the value added statement, before even we prepare that, we can have some workings, workings to show us now what we are going to have. Now, first of all, we have the sales, which is the turnover. So the sales, which is the turnover, the gross sales, and if you can look at now what we have here, the turnover is 32,135. It is the last item there. So I think we can, because the preparation of value added statement is easier, we can start with that. So we have value. added statement. So we prepare this first. So remember the amounts are in thousands, so we will have two amounts columns in thousands. Okay, so we start with the turnover, which is this, like the sales, the gross. So from our problem there, the gross turnover is 32,135. 32,135. Then to the turnover, we will less the cost of bought in materials, less cost of materials, and that cost you can get it from the problem there. So maybe I shorten this. So if you look at the cost of materials, we have the, first of all, we have the purchase of raw materials. We have the purchase of raw materials. So we have to calculate that. You take the purchase of materials, which is 19,655. Then we have, remember, we also have got the closing stock. The closing stock. So the closing stock there is 3,400. So if you subtract that, now the cost of materials, will now be 16. So we can do it here so that we don't forget. 19. Okay. Kimani Gishui 16,255. That's okay. So I'm just showing here 19,655 minus 3,000, the closing stock. So this is like having the sales minus the cost of sales. So that will be 16,255. So if you less this, we are subtracting it from the turnover. We are subtracting it from the turnover. Then this will give us, so we are subtracting that. So if you subtract, what do you get? We'll get 1588. 15 Gichui, that's correct. The others are still doing their calculations. So this is 15,880. So this 15,880 is the value added to the company. the value added to the company. The value added to the company is 15,880. Then now to the value added to the company, we will add any income. So we will add any income to it. Now if we add income, so you check from the problem there that we have, the income that we have is investment income. Investment income. So we add that to investment income. And our investment income is 310. 310. So we add 310 to that. So if you add that, if you add 310 to that, that will be 0916. So 16,190. And the 16,190 is value added available. Let me get that by VA. Value added available. Value added available to the company. So that is what is available. So first of all, you have to calculate that. Once you have calculated the value added available, then we also need to distribute it now to the people who are involved in the generation of this value addition. So the other part is now we can move on the same line now applied as. Now we apply that. Applied as. So the people who are involved in the value addition. So the people who are involved, we can get them from the problem itself. So one, we start with employees. Remember, it is the amount that we have here that we are dividing amongst the people who are involved in the generation. So to the employees, we add, so we go to the problem, you find that we have wages, salaries, and pension. Wages, salaries, and pension. So to employees, that is the first one. So we have wages, salaries, and pensions. So you can write the others. The amount there was 5,000. 5,000. We are continuing. So you write it in the first amount column. We can move to the next slide. So that is what is due to the employees. Then we move to providers of capital. Providers of capital. Now to the providers again, we look at the problem there. Now to the providers of capital, one we can see from the equation there, we have the interest expense, interest expense, interest expense, interest expense is 350. Just we have that in our problem. Next, we have ordinary dividends. Ordinary dividends. We just include it as dividends. So for the dividends, we have 340. 340. Then we have minority interest profits again in the problem. Minority interest profits. Minority interest profits, that is 200. We can look at also if we have any provider of capital that we have not included, so that is okay. So we can add this. The total there, if you add 350, that will be 690 plus that. The total there will be 890 for providers of capital. Then we move to the government. Remember, you can see corporation tax there. So for the government one, we have corporation tax. Tax. Then we also have VAT. So the corporation tax is 770. 170. Then we have VAT. Value added tax as 8,000. So if you add that again, that will give us 8,770. 8,770. Remember, employees we had 5,000, so maybe the other slide, but put it here. is the amount there was for wages, salaries, 5,000. Okay. Then we have retained for profit, not for profit, but for maintenance and expansion. So the amount that is retained, I can just retain other items. We'll write them. So retained number one, we have depreciation expense. Expense, that is 675. Then we have the other item. We are looking from the problem, which is retained profit. So if you look at the problem here, the other item that we have not typed is not there. So that difference there will be retained profit. Remember, the amount that we have is 16,190. So that amount will find it out by subtracting whatever we have here plus 675, and then we subtract it from 16,190, which is available. And if you subtract that, then our retained earnings will be 855. So if we add this, now the retained amount for expansion and maintenance, the total amount will be 1,530. 1,530. And if you add all these, what we'll have here will be in 190. You can confirm that, please. If total amount there will come to 16,190. So we're having 5,000 plus 890, 8770 plus 1530. Yes, that is 16,190. So that is our value added statement. Remember, we started with the calculation of the amount that is value added. So we started by taking the turnover, then we less the cost of sales, for example. So remember, the cost of sales is given as the opening stock. Then we add purchases, or we add carriage inwards. Remember, we will also subtract the purchases returns. That will give us cost of goods available for sale. And then when you less the closing stock from cost of goods available for sale, now you get the cost of sales. For our case, we don't have any purchases returns. We don't have any carriage inwards. We don't have any opening stock. So we will simply take the purchases, which was 19,655, minus the closing stock, which is 3,400, to get the cost of sales, which is 16,255. So when you subtract that from the turnover, then you get the value added to the company. To the value added to the company, you add any investment income or any income, then that will give you the value added to the company. Remember, once you've got the value added to the company, then now we redistribute it now to the stakeholders who are involved in the value addition. So for our case here, we have the employees. So we distribute their wages there. We have the providers of capital, the interest expense, the dividend, the minority interest, all of them. We have the government, the corporation tax, the value added tax, so we add them. And then now we retain the other amount for maintenance and expansion. So what we had here in the retaining, we had the depreciation expense only. So the other part, we will take it as the retained earnings. And that is our value added statement. So like I said before, I would want us to move to now the discussion forum. There is a problem that I've posted there. Please work on it. We are ending the live session, but I'll be on in the other side for the discussion forum while attending now the moderation meeting for the exam. So please make sure that you move to the discussion forum. Any question is welcome or any clarification. So thank you for today. May God bless you. Thank you.